Through 2018 and 2019, trade tensions in the Fed comments have driven stock market volatility and performance. Stocks were up the first 3 quarters of 2018, reflecting a strong economy. U.S.-China trade was being addressed in hopes that maybe, just maybe, a deal could get done. But in early October, Fed Chair Jerome Powell uttered the word overshoot, referring to rate increases, and the markets traded off significantly in fourth quarter. But optimism returned in 2019, with the markets up in the first 4 months. The Fed had paused on rate hikes, and a U.S.-China trade deal appeared close. But in May, China backtracked on key trade agreement terms, and the U.S. walked away from the table, and stocks then traded off. This was compounded by President Trump's threat of up to 25% tariffs on Mexican imports unless Mexico helped with illegal immigration. Stocks went lower. But we started June with Mexico agreeing to help with illegal immigration, and the tariff threat was lifted. Stocks rose. Then on June 18th, President Trump messaged that he and China President Xi would meet at the G20 and the teams would get together beforehand. Stocks moved higher. Day in and day out, the stock market jumps and appears random. Good news, stocks move higher. Bad news, they turn lower. When we study the data, we see the patterns take a shape, the classic bell curve, and the average over the long term is modestly positive. We invite you to read this week's SightLines on trade, the Fed, volatility, and stock market performance. Thank you.